Hello traders, welcome to Flow with the Markets Tuesday. You know what we're going to be doing in this video. We're just going to have an update on what happened on Monday, how did the market flow, where did it go, and of course the biggest aim of this Flow with the Markets video series is to pretty much adapt to the market and to teach you how I constantly flow with the markets, because again the analysis we have on Saturday, on Monday, the market opens and it does something completely different. So again, as I keep saying, the biggest skill you can obtain as a trader is to flow with the markets and pretty much react to what is happening instead of predicting where the market is going to go and like throwing your bias on the markets. Okay, so without further ado, let's go through all the pairs. Again, this is unedited. We don't have any transitions, we don't have any pauses, we don't have any timestamps. So again, just bear with me, go with me, and let's see how the market is looking like so far. Let's roll the intro. All right, back to the charts. Well, pretty much again, we're going to get started with a Dixie, but just to remind you, we're having a very huge news week ahead of us. And like if I just go to my other screen right there, we see that today we just have the CPI. So we have Core Harmonized Index of Consumer Prices, which again is the computerized version, I was told by a fundamental expert. But pretty much again, this is kind of the true one, but not entirely, because again we have the other consumer prices index, right? And this one is kind of core harmonized and harmonized, so not the real thing. Then later today we have CPI for, so yeah, this one is kind of the one, right? So Bank of Canada CPI, right? So that is the important one. And then yeah, CPI, pretty much that's it. So that is for today. So Canadian news, and we're already seeing the cat actually react to it. I already had a look at it just to see how it's pricing in that. But pretty much we're going to be having the biggest news tomorrow and on Thursday, and then probably we're going to have a good trading day on Friday. So stay tuned for that. Now, back to the charts, keeping it extremely simple. What did the Dixie do? Well, we had two scenarios, either for the market to push up and then continue up to push up in reverse, right? Or for the market to pull back, start filling in that imbalance, pull us back below that 50%, and then start reacting, and which is pretty much what is happening. I'm not sure why my range is like this. So yeah, this is most likely the daily range. So daily low, daily high. The market is pulling back towards the 50%. It's filling in that imbalance, right? You can see we tapped in first, reacted, tapped in second time, reacted, and it looks like we want to make another deeper tap, which means that DXY is overall bearish right now. So I don't really want to say bearish, but it's still pulling us back into that imbalance. Okay, so we could expect like a deeper tap. And of course, if we just jump on the 50-minute time frame to have a look at how it looks like, you see what happened. We had the Asian range, the market took out the Asian high. It had like a little, no, it was actually equals, but then yeah, so technically it aligned bearish exactly right there. So yes, currently the 50-minute is bearish, but what we also did is we took out the Asian low and we took out the previous daily low. So I can already also start expecting it reacting to the upside, all right? But yes, I mean, the current price action we have in is exactly this. We are trying to fill in that imbalance. We tried once, we tried two times, we tried three times. Right now we're trying for a fourth time. So are we going to get a little bit deeper, or are we going to be reversing from here? Well, we have to see. Currently, the 50-minute is bearish, right? And we didn't get any signs of a bullish market on the Dixie, especially because yeah, we just kind of opened yesterday and chop and chop and chop and chop and chop around and chop around and chop around, right? Then we dropped a little bit lower high, and right now it's just actually made a lower low. So let's see if it's gonna pull back and continue going lower. So if we have that short-term bearish bias on the DXY, then we should have a short-term bullish bias on EU, which is of course our next pair. So the forecast goes perfect, and I'm really looking forward to short the hell out of this pair, of course, if it provides. I did try to long it yesterday. There was a beautiful 50-minute setup, but it did not provide a 1-minute entry, which is what I was actually looking for. But yes, we opened, we chopped around for a very long time. So yesterday was extremely choppy day for all the pairs. And then we made this very big move during New York. We tapped the open of the imbalance. We took a little bit of liquidity. Right now we pull back, and again, similar to the Dixie, well, I cannot say for sure, but I do get a feeling that we might pop up once more to the upside to actually come in, fill the imbalance, tap deeper above the 50%, and then be given the short. But again, we don't know. So currently we did pull back above the 50 and we did tap the imbalance opening, okay? But then of course, the 50-minute right now is tricky because if you really have a look at the range, this is exactly the last 50-minute break. And there was pretty much that long trade that I told you that there was a long trade because the market chopped and broke down and broke up and then broke down and then broke up with a nice body close. It pulled back into the demand zone right there and then it just rocketed. So beautiful trade right there. But your guy was on the 1 minute looking for that confirmation entry and the market ran away without me, which is what usually happens, right? So pretty much right now, this is the high and this is the low right there. So if I just move it, I'm just going to take a big like this. So that is the current range we're trading into, right? And when it's big like this, I was looking for a 5-minute long this morning, but once again, the market kind of took out the Asian low, chopped around. I was looking for London Open. There is London Open, wick down, wick up, then it pushed up. Then I was looking to long from here. It didn't tag me in, just gave a very little pullback, and then it pushed up. So once again, failing to capitalize on that EU and trying to capitalize on GU, which is very choppy right now. So currently, what do I see the market doing? Well, a couple of scenarios. Either continue to break that 50-minute high, and then from there, it could continue, but be careful, because if we take out this 50-minute high, and if we tap inside that imbalance, and if we actually feel that imbalance, then of course start preparing for shorts. Don't go that big on the longs, okay? The next scenario will be if somehow EU decides to drop inside this zone, then I'm going to be dropping to the 1 minute and or even to the 5 minute, because this one is a pretty old zone. I'm going to be looking for a 5-minute trend change right there to give me the alignment. And then from there, I'm going to be looking for the long trade. And of course, the market could just continue chopping around because again, we have FOMC week, we have CPIs and interest rates and all of this crazy stuff once again. After the banks took a long break, they're right now back manipulating us, giving us choppy markets. So not nice. But again, that is EU right now. Break above, if it feels the imbalance, start preparing for shorts. If it pulls back right now, you can try to take a long trade and of course flow with the markets. If it breaks this low, then it's bearish and then you can of course start looking for the shorts because overall the bias is shorts. Again, was this pullback enough? We don't know, but only price will show us. Unfortunately, 50-minute low, 50-minute high. We cannot really go short because we don't have bearish market structure. Euro JPY, let's have a look. So yes, this one I had two scenarios, either just to start straight flushing because it did feel the imbalance and almost tapped into the zone, or to give us like a deeper tap inside the zone and then give us an alignment, which is what is happening right now. So we came in and we took out this high as liquidity. Look at all the wicks that are wicking above. And right now we actually came in today and also wicked these 3 wicks right there. So it definitely does look shorts. So if we jump on the 15-minute time frame, yeah, it was forming like these kind of highs. This was not really equals. But then, yeah, we have this high, which is the previous daily high. Yes. Asian high, they got swept, both of them. And then pretty much our trend change is, let me draw this correctly. It is right there. Okay, right there. And it's not the best. I mean, it's not a very nice, clear body break with a lot of momentum, right? But there is the trend change, there is the retest. And of course, you could be right now on the 1 minute looking for the entry, but just look at the I mean, guys, it's been 2 weeks that I'm actually getting into the zone and really trying to trade. And it's been very bad. I mean, well, not very bad. Don't get me wrong. I'm not blowing an account or losing that much, but it's just staying on the charts all day, taking trades, them not playing out, chopping around, stop losses, and all of this sort of stuff. So no clear movements. So again, on Euro yen, the bias is bearish. But again, keep in mind when you have pure imbalance like this, ooh, Euro USD, where the hell you're going? If you have pure imbalance like this, the market does tend to grab a little bit more liquidity. So again, I wouldn't be surprised if the market pushes once more, and then maybe it gives us a trend change. So again, the bias on Euro yen is short, but just make sure to wait for the right setup that of course sticks your plan. And yeah, show up, take those losses, and keep showing up because the wins are going to be just around the corner. So that is EJ short bias. Again, you have to work your way around the 50-minute, wait for the market to either start flowing to the downside so you can catch those continuations, or of course, keep trying to strike until you get that short. Now, the Aussies and the NZDs, I'm just not going to have a look at them because, again, they didn't do anything once again. Like, we closed right there. Then I said we can either flush or we can either break above. Nothing happened, right? Nothing happened. We just chopped around. We had RBA meeting minutes this morning, which should have maybe shaken a little bit the Aussies. Nothing like this. The market is just chopping around. And again, when the 4-hourly time frame is extremely choppy, why would you go to the 50-minute time frame to try to look for something? Because then you go on the 50-minute time frame and you just have this, which is consolidation. And then yes, of course, you can jump in right there. Took out the Asian high, down, there is a short. Breakdown, there is a short. Breakdown, there is a short. Breakdown, there is a short, right? Until it aligned bullish. So there are setups, right? But the setups that I take personally just like give me a little bit of profit, then go to hit back or hit stop loss, and then chop around. Again, yesterday you definitely could have launched into a couple of shorts, but I mean, look at this. This trade took from 1:11, so that trade took 3 hours to go down, right? Then this one was faster. So again, there are setups depending on the pair you trade, but just again, looking at the FOIC, I never trade. Well, I usually try to trade if, I tried not to trade if the 4-hourly time frame is not very clear. So again, in the Aussie USD case, it is bearish on the FOIC, so you go with high confidence shorts, and then the market just keeps chopping around. All right, so again, be careful, wait for a brand new 4-hourly range, and then start trading. And of course, not to say about Aussie JPY. Low to high, nothing much. We're coming in very close to be making a new 4-hourly high, so hopefully that happens soon, so we can take that liquidity and then start doing some other stuff. Let's see. NZUSD, the same, guys. I mean, you could get some intraday trades inside, but why would you when it's just absolutely choppy on the FOIC? This is not high probability trading. Again, we're having daily zone. We're also having a 4-hourly zone. The market tapped in, reacted, tapped in, reacted. Yesterday, chop, chop, chop. Right now it's coming in, right? It's coming in. I would say that this high should be liquidity because that is a high that failed to cause anything to the downside. So we can utilize that as liquidity. And if it gets taken, and then if we get a nice bearish trend change, then of course we can try to take a trade from there with a little bit more confidence. And again, I mean, yesterday, the market opens, takes out the Asian high, makes a trend change, you still can get a couple of shorts, right? There is one short, there is two short. Actually, both of them achieved the low. Then the market reverses, starts trending higher. And yeah, pretty much you got that little move down, which is pretty much London session. So again, there are setups, but if you want to be trading in such conditions, you just should be aware that the 4-hourly is choppy and not swing for the fences, like go for a 4-hourly lower low when the market is just chopping you around. Okay, so currently we opened very bullish. We had a very nice opening on the Forex pairs this morning with a very nice push. Unfortunately, I'm in a GU long trade right now, and this pair just doesn't want to go. It's not nice. Pushes up, pulls back. So right now, what I would expect, well, if the market pulls back, I can take a long. But if the market makes a brand new valid range and pushes up and takes that liquidity, then I would start looking for shorts. Why? Well, because still the macro bias, the higher time frame bias is shorts. So I wouldn't really try very hard to go long, right? So that's pretty much my outlook. Waiting for that market to come in inside, take this liquidity, which is that old week high, give me a 50-minute bearish alignment, and then go for the short. Let's see. NZD JPY, no comment on this one. Oh wait, I'm on the 50-minute. You can see how easily you can get lost on the 50-minute. And again, do you get set up? Probably, right? But again, you don't forget you're trading within this very big thing. So again, guys, zoom out, always look at the hard time frames. USD JPY, so is it waiting for the FOMC? Probably. So we suspected that it could break higher and continue, or it could start a pullback, and it did start a pullback. But again, look at it. So not clear. There is no clear momentum. There is nothing really to indicate strength. And then of course we jump on the 50-minute time frame, and yesterday the whole day we had this. So good luck trading this. This morning we have a strange Asian range, took out the high, and right now we have very nice sell developing right there. We do have like a trend change right here. So again, if you just want pure market structure analysis, that is it. It's currently bearish on the 50-minute. It did take out the Asian high, it did take out the previous day's Asian high, aligned very nicely bearish. So again, if this market is going to be traveling towards the 50%, then there is your setup. So again, you can definitely go short with high confidence because you are potentially waiting for that 50% and for that zone to tap. But again, I wouldn't be surprised if it just starts doing some random stuff, maybe stops you out and then continues to do some random stuff again. So that is UJ right now, but I would totally recommend all of us, guys. Again, this is a tip that I would also give myself. just don't trade when you have like CPI, interest rates, and news, and all of this stuff, and like the banks freshly coming to do their stuff, right? The last 2 weeks have been extremely bad, right? This week looks like this as well. So again, if you recognize those market conditions, then just look to become a little bit more conservative. UCAT, again, I don't look at this pair anymore. But again, when I stop looking at the pair, it starts moving. Like, what the hell? GU, until I didn't look at it, it was moving very great. And pretty much when I started looking at it, which was, I'm not sure, somewhere right there, it started chopping around, right? Look at here. I didn't trade all this because I wasn't trading GU. And then look at here. I came in probably right there on the Monday of September 11th. It started chopping around, right? And this week, look at how it looks like. So nothing has been done so far. It's just incredibly bad. And still, I'm making the mistake to be jumping in this market, trying to, well, not to force something. I'm still playing my edge. But again, if the forward is like this, exactly as I told you, like on the Aussies and on everything else, why would you trade it? All right, so absolutely choppy right now. I mean, took out the low, took out the high. This morning it came in and took out that low with a very little pipette, right? But again, don't forget that we have this daily liquidity that the market is most likely gravitating towards. And there is my stop loss about to be go on GU. So the trade I took this morning is, again, we have a very big range right now. Yesterday, the market came in, Asian low, and all that stuff was taken. We had an alignment right here, right? And I took a trade from somewhere right there, break even, right? I took also a half loss right there because I tried to rush into a 1 minute trade instead of looking for a little bit more confirmation. So I took that move, then came in, break even, right? Then the market chops. And this morning, it came in, it took out that low, which technically creates a new range. Then it aligned bullish on the 50-minute time frame right there. So currently I am in a long trade that looks, let me see. Yeah, that looks like that right now. And I'm still in the trade, but I'm most likely gonna get stopped. So yeah, this trade reached 4R, but did I place my stop loss? No, I think I did place my stop loss below this low, because I wanted to be safe, because yeah, keeping in mind all the crazy market conditions. Yeah, right now the stop loss is moved here because of this follow through and because we have a brand new forward range. 15-minute range. There is a new structure break right there. So then technically this right there becomes a new 50-minute demand zone. And my stop loss is below right there. I'm still in the trade, but I do think we're going to get taken out. And then most likely we're going to really shake out that daily low to the downside and then maybe start doing something. But again, if you have a look at GU overall, there is no clear move. There's nothing. So again, why would I trade it? Why would you trade it? I don't know. We, of course, have to show up every single day, look at the setups. But again, sometimes we got to acknowledge that it's not looking very good. So this is the current positioning of GU, right? Very big consolidation right now. And yes, it made a 50-minute breakup. Right now, we just came in and swept this little low. And yeah, again, what is going to happen? I have no idea, because again, I've been trying to long this pair yesterday, whole day, longed it successfully, hit break even, right? Right now, I tried to long it this morning. It's going to hit my reduced stop loss, right? So again, not clear, and I have nothing to say about it because it's just chopping around right there on the 4H and it doesn't make any sense. So again, guys, try not to force it. GJ, well, guess what? Same story. The market opened, pushed down a little bit, and then a very big chop, right? Very big chop. And if I just jump on the 50-minute time frame, again, if you just zoom out a little bit like this, what is happening? Well, we have a very big consolidation. So again, why would you look to trade this? Right? And again, I can, of course, zoom in right there and start marking up structure. It was the same range as on GU. There's that demand zone. The market came in. And again, we're still trading within this range from the low to the high on the 50-minute. And we don't exit it for more than a day. So again, when you have conditions like this, don't trade. So again, nothing to say about GJ. It definitely looks short. It does have this weak low to attack, because once again, if you just look at the hard time frames, that is the high, that is the low. We pull back above the 50%, we filled in the imbalance. So again, the next target is the low, right? So if you do get a short setup, then of course, make sure to go for it. And my GU just hit stop loss. Damn it. There it is, breaking clearly below the low. And most likely right now it's going to come in, seek that liquidity, or just continue going lower. So again, let's see. Now it's all about adaptation. Like I just took the stop loss. So for example, right now, yes, there is a trend change. What caused the trend change? It's this potential supply. So again, depending on what is going to happen right now, if we start pulling back, I'm going to take a short. But if we take that liquidity and then we start massively expanding, then potentially I'm going to be looking to take a long in New York. Okay. Really depends on liquidity, but again, aligning bearish. So from this high to this low, that is the current range. So let's see how it goes. Now, if we look at gold did move a little bit. So yeah, we did expect like this to become liquidity, but we didn't pull back that much. So one of my scenarios was to get a deeper pullback. The other scenario is to break up and just continue going higher. And yeah, we did break up. So we did break up. Let's actually mark structure as if we should. There is a hourly break, kind of a first we came up with a wick, retested, but then we broke up. So I'm still going to be taking that as my major high low formation. And there is the most recent hourly range. Let's just do it with a premium and discount. And we actually just came in and took out that previous daily high. And is this a structure break? Is it not? Well, it's tricky. According to me, it's not. So I'm just going to enlarge my range to this and then still wait for that pullback. And then, of course, if you go to your 50-minute time frame, the market broke the Asian low, chopped down a little bit, then massive push up, which is what we had on all the pairs. But again, we can see they all failed to follow through. They just make a push and then they return back and start chopping around once again. So right now, I would definitely avoid going long on gold because we took out daily high, we took out the Asian high, right? So of course, the 50-minute range is here. So technically, you should be looking for a pullback and for a long trade. But I would love to see a new high, trend change down, and then start trading it towards the 50%. So those are my two scenarios on gold. And once again, everything can happen right now with the FOMC incoming. So again, follow the markets and look to go on the conservative side. Indices is just a crazy story. I don't even want to talk about it. On US 30, we still are at that decision point. Fairly low, fairly high. But again, this is the only index that is still right now bullish. So chops around. Again, if I just jump on the 30-minute time frame, yesterday it had some crazy price action once again. Like chops, took out the low, then took out the high. And then technically right now, if this one is a break, then this one is a break up. And then this is the demand zone. So again, this morning I told my team, well, it looks overall longs, but again, why would I long this when it's just doing this and it's not clearly trending? So again, at least for indices, I try to step aside because if I start taking losses on indices, then that is going to be a little bit more painful, right? So this is why I try to stick with Forex, try to catch like a little move, but I can't even do that. So indices, they are right now bullish, like you can see at US 30. For example, this morning, I wanted to entertain a long idea and I was looking for this low to be taken as liquidity. It didn't take it and it reacted. And right now, it's exactly in the middle of nowhere. So it either comes down and then maybe gives me a long, or it either breaks up and then gives me a long, or it just reverses down. I don't know. And personally, I'm not gonna touch the indices until the FOMC. Exactly the same story with Nasdaq, although this one actually kind of wicked the fairly low, but then it got extremely ugly. Like it came in, wicked the low, but then as it wicked the low, it also wicked the high that caused the low, and then it just started chopping around. So again, I wouldn't really take anything right there for a lower low and then a lower high because it's just chopping around. So again, what I can simply do is just expand the range. And again, we still have the imbalance and we still have like that bullish sentiment. This is why I have a little bit more bullish sentiment on the indices, because they namely Nasdaq and S&P, they do have like a little potential to push up, to fill that imbalance and to tap into the 50%. So right now, the 30-minute range on the indices is this. What I was looking for this morning is for this low to be taken in order to take a long. He didn't take it, reacted. So what is going to happen right now? I don't know. There are two scenarios, either to continue breaking up and then we take a long continuation, or of course to pull back down and chop around, or maybe give us a long, who knows, or just to crush to the downside and do nothing. So again, I don't even have kind of motivation right now to be breaking down the market, because it's just not acting, right? It's just not acting. And again, like S&P does look a little bit, slightly bit cleaner, because it clearly kind of wicked below this hourly low, and then it clearly closed with a body above this hourly high. So I do like this, which technically then means we have a hourly demand zone. And then if we just jump on the 30-minute, which is the time frame that I'm working on with indices, the 30-minute low and the hourly low and the 30-minute high and the hourly high are exactly the same. So high to low, the market pulled back to 50%, and then it started chopping around. So again, this morning I was looking for this liquidity to be taken. No liquidity was taken before that move up. So again, I cannot take this trade. So again, that's fine. So no trades on this one. My forecast, again, I don't know. A lot of things could happen. We can break up, continue going higher, because actually S&P is bullish and we might head higher to fill in that imbalance. We can pull back, maybe take some liquidity, and then maybe during New York give us a long, or of course we can flush to the downside. So once again, guys, flow with the markets and allow them to tell you what is going to happen, because right now is Bitcoin pumping. Oh yeah, nice one on Bitcoin. After all of this chop, it starts to pump, but again, I don't care about Bitcoin. That is it right now. Again, DXY is waiting for FOMC, and when you have a news week, you have all the chop. When the news come out, you have the push, right? So again, if you have news ahead of you, I keep relearning this lesson until I actually really affirm it into myself, and maybe just take a break this week when we have FOMC, CPI, and interest rates and all of that stuff. Again, take a break, come back next week and trade when the probabilities are high, because else you're just wasting time on the charts, wasting energy. Like yesterday, I was just watching this Euro USD, looking for a bullish alignment, aligned bullish with a wick, aligned bearish, aligned bearish, aligned bullish, then aligned bearish, aligned bullish. Like again, you're just constantly up and down ping pong all day, right? GU, exactly the same story. Was looking for it all day yesterday. Taps in, taps in, taps in, looking for that long. And look at what it does right now. Comes in, wicks, and guess what? It's going to return back and start chopping most likely. Look at that, the bastard. Took my stop loss, started reacting. So once again, just wait for it and let's see what's going to happen. But again, why would you strike on all of this consolidation? So that's pretty much it. I mean, I wouldn't even make a recap, because there is absolutely nothing clear right now. There is nothing that shouts to me like, yo, this is a very good trade. So again, I keep showing up. Luckily, I trade with half risk right now. At least this is what I do, because I recognize the conditions. So I cut the risk in half on every single trade I take right now, until I really start to get the feeling that the market is actually running as it should. So I really do suggest you do the same, guys. So again, I wish you an incredible week ahead. But I'm just going to tell you, wait for FOMC, wait for CPI, wait for all the news to be over, and then start showing up. Because again, we are most likely just wasting time right now, spending our capital and taking losses, damaging our psychology, and pretty much that's it. So that's from me. Let me know in the comments, how did your week start? Do you also feel like the markets are crazy, or are you making hell a lot of money? Because when I think the market is crazy, somebody else is making tons of money, and then when the market gets amazing for me, then somebody else is losing money. It's usually how it is with the market. Let me know how you're doing. I wish you an incredible week ahead of you, and talk to you on Saturday.